Money laundering happens in TV, movies, crime novels, and here. Yep, money laundering can happen anywhere, including right under your nose.
In my sandwich?
No, not in your sandwich. That was a metaphor. In 2020, the United Nations estimated that $800 billion to $2 trillion disappeared through money laundering. Want to learn how to stop money laundering? First, you'll need to learn how it's done. Money laundering is the process of making dirty money clean. No, not like that. Money laundering is the process of making dirty money clean so that criminals can actually use their ill-earned cash without getting tracked down. The first stage of money laundering is placement, when the dirty money is placed in a legitimate financial system like a bank or a business. Cash-intensive businesses where transactions aren't closely regulated, like bars and pawn shops, are especially vulnerable. So let's say you illegally got $10 million. Where would you put it?
In my sandwich?
Enough with the sandwich. To hide that kind of money, a fraudster might create a few cash-heavy legitimate businesses, like an antique shop or a hair salon. Once the money is placed in the salon, it's time to move to the second stage of money laundering, which is layering. Layering is the act of moving the money through complex transactions to make it virtually untraceable. So, at the salon, you might gradually slip the dirty money into the unregulated tip jar to commingle with the legitimate cash, so you can't tell the cash apart. The final stage of money laundering is integration, when you take that mixed up money to the bank. Once you've deposited the dirty money along with the tips into the salon's bank account, it becomes legitimate and untraceable, and spendable. Cash you could use to buy anything you want, including a sandwich. Understanding the basic mechanics of money laundering is key to knowing your customer in advancing the fight against real-life crime.
Now that we have determined what money laundering is, we can now focus on how we as employees may contribute to the problem and what consequences we may face. If you advise a customer to break up transactions to avoid reporting, assist others whom you know or suspect are engaged in criminal misconduct, are in possession of property which you know or believe to be stolen or proceeds from criminal activity, conceal or transfer proceeds to avoid prosecution, use incorrect payment types to avoid filing, fail to disclose knowledge of suspected money laundering, tip off a customer by telling them we are suspicious of their activity or that they are being investigated. Potentially any member of staff could be caught by the money laundering provisions if they suspect money laundering and either become involved or do nothing. The consequences for assisting a customer, as mentioned, can result in serious criminal sanctions for breach of the legislation. Penalties could include imprisonment or fines for the employee and/or the company. Another important step to fight money laundering is to know your customer KYC by completing Customer Due Diligence CDD and/or Enhanced Due Diligence EDD. Customer Due Diligence CDD is the collection and verification of customer information as well as the ongoing gathering of information. Verify customer identity and enter information in Prima. This includes name, address, birth date, identification type and number, as well as their occupation. Understand the nature of the customer's activities. The primary goal is to satisfy that the source of the customer's funds is legitimate. Assess money laundering risks associated with the customer for purposes of monitoring the customer's activities. Enhanced Due Diligence EDD is a higher level of due diligence when a situation occurs that presents an increased opportunity for money laundering or terrorist financing caused by the transaction. When does enhanced due diligence take place? When a customer conducts large, frequent, or unusual transactions. When a customer does not provide sufficient information. Sample questions to ask: where did you get the funds? Why the increase in volume? Why are you conducting transactions below the record-keeping threshold? Verify the identity of a customer to protect the company from fraud and losses resulting from illegal funds and transactions. It is important to input as much customer information into Prima as you can get for every transaction. Let's discuss our legal responsibilities in regards to reporting on Form 8300. When a customer gives us over $10,000 in cash or cash equivalent, cashier's check, money order, etc. in one day or over a 12-month period, Prima will print a Form 8300. Follow these steps for all cash transactions in excess of $10,000. Make a copy of the customer's ID for any transaction greater than $10,000 and enter all customer information in Prima, including social security number, birth date, address, phone number, ID information, occupation, etc. It is important to list the social security number and occupation, as this will need to be reported on Form 8300. A member of management must complete Form 8300 by adding the social security number and occupation or business. If the customer states unemployed or retired, we need to know what type of work they did previously. Submit the Form 8300 to the compliance officer the day of the transaction. All forms are to be kept in your anti-money laundering folder in a locked location for 5 years. For more information, please refer to the Anti-Money Laundering Policy and Procedures. We touched previously on suspicious activity. Following are some red flags as well as how to report suspicious activity. Red flags include but are not limited to transactions that are not consistent with the usual profile of a customer. Transactions that appear to be beyond the means of the customer based on his/her stated or known occupation or income. Transactions appear to be more than the usual amount based on the customer's history. Transactions where customer does not consider the value, size, and/or color of the precious stone, precious metal, or precious product. Numerous transactions by a customer, especially over a short period of time, such that the amount of each transaction is not substantial but the cumulative total of which is substantial. Use of third parties in transactions related to precious metals and precious stones, for example, payments received from a third party, who is not the owner of the funds, without legitimate business purpose. Precious stones/metals product delivered to a third party, who is not the owner or payer of funds, without legitimate business purpose. Customer gives false information, refuses to provide personal information, or makes every attempt to avoid reporting. Customer refuses to complete transaction when asked for ID or reduces the amount to avoid reporting. Customer threatens or bribes an employee to avoid reporting. Procedures for reporting suspicious activity. Most importantly, we cannot let a customer know we are suspicious of their activity or that we are filing a suspicious activity report. A member of management reports any suspicious activity to the compliance officer. Email as much detail as possible explaining what occurred and why it was suspicious. Compliance officer researches the incident and completes the SAR suspicious activity report. This is done without the customer's knowledge, but you will need to collect as much data as possible, including the customer's social security number, personal information, and occupation. The compliance officer will submit the form electronically within 48 hours. All forms are kept in a locked file to protect customer information for 5 years. We are also required to conform with OFAC rules and regulations. OFAC is the Office of Foreign Assets Control of the U.S. Department of the Treasury, which administers and enforces economic and trade sanctions against targeted foreign countries, regimes, and individuals determined to be a threat to the national security, foreign policy, or economy of the U.S. As part of its enforcement efforts, OFAC publishes a list of individuals and companies owned or controlled by, or acting for or on behalf of, targeted countries, as well as individuals, groups, and entities, such as terrorists and narcotics traffickers designated under programs that are not country-specific. Collectively, such individuals and companies are called Specially Designated Nationals (SDNs). Their assets are blocked and U.S. persons are prohibited from dealing with them. It is illegal to conduct business with a person who is on the SDN list. What you need to know: Prima is programmed to check each customer's name with the SDN list. If there is a match, you will be alerted. An alert does not necessarily mean that the individual you are doing business with is the person on the list. If you get a match, please refer to the anti-money laundering policies and procedures for next steps. Remember, it is our responsibility as pawnbrokers to help prevent and detect money laundering, as well as report any suspicious or criminal activity we may witness. For more information, please refer to the Anti-Money Laundering Policy and Procedures. Compliance Officer Contact Information: Kim McComb Kim at smg.inc 407-539-4308.